Hi, Alan Anthony here. What we're going to be discussing in this video is trend or trending. Right, so first let's talk about trend. Now basically you have either an uptrend or a downtrend. Alright, what you see in the middle here is a consolidating market, meaning that there's no uptrend or downtrend, but what it is the market is moving sideways. But so let's first discuss uptrend. What are you seeing here? This line is what you call an area of value. So whenever the market is going up, it's going up, it comes back, touches the line, and then continues going up, touches the line. So that's an area of value. That is in essence what you call a bull market or a bullish momentum. Take a look at this video with a demonstration. So here is we're using BTC USDT. All right, that is the crypto pair. All right, so and how basically you can literally use the trend to your benefit. Right, so you will be working with the uptrend at first. All right, so what you do is go to the toolbar there and you see trend line. All right, and then what you can do in this case, you pull a line from there upwards. All right, a lot of people make the mistake to put the line up here as like this, for example, like this. Okay, now what you're doing in fact is taking it in the wrong direction. All right, because what you want to do is take it on the rebound. So your area of value really would be, let's just remove that. Your area of value would be the line here when the candles or the market comes back and touches this line. All right. So your trend line should always be under the candles. All right. So that's for an uptrend. So this is the D or the day time chart. All right. So for each one of these candles, it is 1 day. All right. So basically, starting from this point, there is several days here. So you have like 1, 2, 3, 4, 5, 6, 7. So it's like a couple of weeks or so, right? So when you look at the history, you would see that this line has been respecting. So it's the area of value. So when it comes back and touches here, you expect it to go up. All right, comes back, touches here, go up, and so on and so forth. All right, so there you have it, an example of an uptrend. Remember to always put the trend line, draw the trend line under the candles. All right, so there you have it. Now that you understand what uptrend is, let's discuss downtrend. Downtrend is just basically the opposite. Now your area of value is this red line here. As you see, the market is touching the line and then bouncing off this line. So it's what you call a bearish momentum. So the market is moving down. So what do you look for? You're basically looking for selling. So you're selling whatever asset that you are looking at, you're looking at sells. All right, so it's a bearish momentum. Take a look at this video with an example. So basically, the downtrend would give you an idea of when the market pulls back and when you should enter. All right, so once again, you go to the toolbar and click on trend line, and you can pull your trend line from here going down. All right, so what you see happening is whenever, let me just do this like this. Yeah. All right, so whenever the market goes up or the candles goes up and touches the trend line, you enter a sell. So in essence, as opposed or opposite to the uptrend as explained here before, the downtrend, you put the trend line above the candles. All right. So where it's in the uptrend, you put it under the candle, and when the candles come back and touches or retrace and touches the area of value, which in this case is the trend line itself, you enter a buy. For the downtrend, when the market pulls back or retraces and touches the downtrend line, it's when you would enter a sell. All right, so in this case, you see it comes back here a few times. All right, in this case, about 3 times. And you can enter a sell there. All right. So once again, this is the day time frame chart. All right. So that is what a downtrend looks like. And again, they put your trend line at the top or above the candles. All right. Again, a lot of people makes the mistake and put it underneath. So if you, so what you can also do is draw, if you choose to, you can draw a trend line. Let's just say from here, right? It still is a downtrend, but in this case, what you would be doing is actually when the market bounces off this particular line is when you would enter a buy. So what you've done here is create what you call a, a descending channel. All right, so it's a descending channel. If you had done the same thing on this side, for example, something like this here, this would have been an ascending channel. So when the market goes up, you have an area of value, another area of value, but this in this case you would be entering a sell. When it touches the lower line, trend line, of course you enter a buy. So if you're looking predominantly for buys, because this is what you call an uptrend, and of course we, as we always say, the trend is your friend. There you have it. So now you understand uptrend and downtrend. So let's recap before we move on to consolidating market. Right? Uptrend, basically, like I said, the line is an area of value. Right? So when the market touches this line, basically what you're looking for is to buy. It's a bullish momentum. Right? The same is true, or in fact the same is the opposite with downtrend. Right? Basically, when the market touches the line, you're looking at selling. Right, so this is your area of value, the line is your area of value. Right, once it breaks the line, well then you're looking at a change in trend. Right, so now we're going to be discussing consolidating market. What you have happening is that you have an uptrend. So let's just say that the market is moving up like it is here. So this is your uptrend, right? And then of course it started moving sideways. How do you know whether to buy or sell? Now you can, in essence, buy and sell while it's moving sideways. So you see this green line, when it touches the green line, you're looking at buying. When it touches the red line, you're looking at selling. So these two lines are your areas of value. So although the market is moving sideways, you can still benefit. However, when the market starts going down, in this case, like this, you see it would have broken this bottom line or this green line and started moving downwards. Then here you have it, a downtrend. So it can actually be the flip, whereby you're consolidating, it can consolidate here, for example. You can start consolidating here and then possibly go back up. So how do you know when the trend is changing? Is when it breaks the line. In this case, it did not break the line. What it done was move sideways, and then basically it's moving downwards after, so it started a downtrend. All right, so take a look at this video and for an example of the entire scenario. All right, so basically what I'm going to explain is exactly what happens when the market moves sideways and how do you can effectively trade a sideways market, or what you call consolidating. All right, so let's just recap from what we discussed before. We have basically an uptrend happening here in this case. All right, the market retraces, comes back down. It starts here basically. All right, it comes back down to here. All right, and of course this is what you call an area value. You enter a buy, came back down, it touches, you enter a buy again. All right, it came back down, it went all the way up to here, came back down, touches, you enter a buy, came back down, buy, and buy. Right, so this is an uptrend. This is how you actually enter the buys for an uptrend. This line is what you call your area of value. All right, then what happens then when you know the trend is changing, you have a situation where the market moves sideways. All right, so also previously what we would have done is discussed the downtrend. Market went down, it came up, however, and touched again this line. It came up, touched this line. All right, and then you have so then you enter sells. All right, so it went down all the way here, came back up, touched this line a couple times, well, in fact, 3 times in this particular example, right? But before it started going down, what you have a situation where you have this long candle, long red candle. It's an engulfing, a bearish engulfing candle. And it actually surpassed the previous candle. And even you can, argue the point that it may also past the previous 2 candles. All right, so it is showing a sign of a trend is changing. How you can actually be able to trade this particular situation or a sideways market. All right, what you do, you can also go back to your toolbar and you bring up your horizontal line and you put a line at the top there. All right, you can color code it red so that when the market or when the candle comes up and touches that, that's your area of value. So that would be called your resistant line or price. All right, and then you can put another line there around here. If you go all the way down here, all right, this can also be an area of value. You can change this to blue or green. All right, so when it comes down, you enter a buy, but I would also place one right around there. All right, because you see this is an area of value because the market, when it touches this line, it actually goes back up, touches again, goes back up. All right, in this case, it passed it. So that's why I put this line here. All right, so this is what a sideways market, but how do you trade a sideways market? Yes, you can trade a sideways market. Although I mentioned that the trend is your friend. What do you do in this case? You enter a sell when it reaches this particular resistant line, and you enter a buy when it reaches any one of these 2 lines. If it breaks this first line, what you call your support level or price, right, of around 59,000, see there, 59,737. If it breaks it, then this would be another area of value of around 57,047. All right, so you can enter a buy when it touches the support level, and you can enter a sell when it touches the resistance level, if it does come back up to this line. All right, so in this case, it's actually touched the support line in more instances than it actually touched the resistant line. All right, so there are multiple opportunities in this case to enter buys. And then of course you see the trend changing when there is a situation of the red candle. All right, there's a doji undecisive, then you have a situation where you saw a red candle happening here, then it kept dropping. All right, then you get a pullback, and then you see multiple red candles. So you see more red candles than green candles, more sell candles than green candles. So it is an indication that the bears are about to take control. All right, in this case, the bulls are taking control. In this case, the market is bears and bulls are pretty much in combat right now. Okay, and then of course the trend change for a downtrend. Okay, there you have it. All right, I hope this video has brought value to you. All right, this video, the purpose is of course to help you increase your success rate in trading. All right, and of course you can be sure to, if you like, for my mentorship program, you can click the link or reach out to me, and I would definitely get you all the help you need to be a successful trader in the markets, right? Whether it's the forex currencies, cryptocurrencies, indices, stocks, commodities, whatever it is. As long as you are able to analyze the market effectively, you are going to be more successful, than have more successful trades than losses. Okay, so once again, be sure to subscribe if you haven't done that, and click the notification bell. And of course, if you like this video, click on the thumbs up button. Thank you. I'm Alan Anthony. See you in the next video.